It's Thursday the 16th, I'm FX Plu and this is CurrencyTransfer.com's market update. And the headlines today are that Qatar backs Turkey to provide a solution to the crisis, sterling continues lower despite higher inflation, and the euro rises as the dollar corrects. So an emerging market meltdown was averted yesterday when Qatar stepped into the Turkey crisis to help shore up the lira and the Turkish economy with a series of loans and investments. The solution brings political concerns, though, given the relationship Qatar has with Iran. When the news broke, the president of Turkey immediately announced a whole bunch of tariffs on US imports and a boycott on all electrical products. Up yours, Trumps. Thanks very much for the damage you did. The market reaction has been a dollar correction and a slight flight to safety, buying the Swiss franc and the Japanese yen, as these political repercussions are unclear as yet. What started as a diplomatic row that the US thought that they would be able to dominate has potential to roll on now that Turkey has clear support from some very deep pockets. The dollar index had moved up to 97 yesterday before the correction had driven it down to 96.79 on the close, and it's moved a little lower overnight to about 96.45. The UK delivered a slight uptick in inflation yesterday. July CPI was 2.5%, up from 2.4 in June. It's now running pretty much neck and neck with wage growth inflation, which means that the MPC policy of very gradual rate hikes can stay in place for the time being, but it was not enough to tempt the market into the pound. Cable drifted down to about 126.60 before the Qatari news broke, and we're back up to 127.30 this morning. Sterling euro fell back through 112 though, as the euro showed a greater potential for recovery against the weakening dollar. So fears of another Eurozone financial crisis have been reduced enormously thanks to the Qatari solution. Worries over the contagion effect from European bank exposure, though, may well lead to further regulation. Ultimately, the ECB should look at how quickly issues can arise when the banks take out such exposure to a country like Turkey without any reference to what similar exposures other European financial institutions have. But for now, it seems that the risk has been averted and euro will go back to being reactive to the dollar, which means for now, euro dollar is up. It's off the low of 113 and we touched 113.90 as the dollar corrected yesterday. I'll see you again tomorrow. Have a great day. Any questions, pop them in the comments below, please.